In the land of pricks, it is better to be a distinct prick than a generic one.
Brands could elevate the kids, teach them why craft is cool, not bring themselves down to the metaverse because people who dress like incels say it is the future. And in the world where attention is shifting from product to experience, the experience of purchasing product is important.
Welcome to the inaugural episode of The Luxury of Opinion. I am Sterling Wilde.
And I am Dagny Berg. Thank you for joining us. We plan this podcast to be about a wide range of subjects,
But mostly novel ideas and terrible mistakes in brand and corporate strategy, and morally dubious actions that turned out to be business savvy. Those can offer insight too.
Moral relativism can still be a winning strategy in 2025. Would you believe? Our first episode is on the bleak prospects of the luxury fashion industry and what the houses could do to ignite another growth cycle, or at least lose less and more controllably.
2024 was quite a disaster. A few brands thrived, but the majority seem in serious trouble.
After years of unprecedented growth and price hikes, some correction was inevitable, right?
Right.
Still, some brands did very well and continued to expand. Any teachable moments there?
I think there's a pattern, yeah?
Swell. Set the scene.
Kering's third quarter sales fell 16%, with flag bearer Gucci down 25%, but Bottega Veneta is up 5%. LVMH does not disclose individual brand performances, but confirmed that with Group Q3 sales down 5%, Loro Piana performed better than its siblings. In the 9 months to the end of September, the Zegna Group, that includes Thom Browne and Tom Ford Fashion, was down 4%, but Zegna's own sales rose 3.4%. Hermes Q3 sales were up 11.3%. Consolidated revenue for 9 months was up 14%.
So, Bottega, Loro Piana, Zegna, and Hermes did well. I see what you mean. There are commonalities.
Rich histories, identifiable positioning, timelessness over seasonality, and, generally speaking, focus on the comfortably wealthy.
Want to clarify who you mean by that?
The quiet luxury consumers who are aware of prices but prioritize other factors when making decisions. Quality, convenience, intrinsic value, and so on.
And you said you wanted to talk about Cucinelli.
Well, we needed to focus on one company to make it snappy, and Cucinelli is the perfect mountain to mine for ideas.
How so?
For starters, it's still independent and doesn't have the heft of a large group behind it.
Unlike Bottega or Loro Piana.
Exactly, and doesn't have instantly recognizable products that can be sold on the secondary market for triple the retail price on the day they are purchased.
Those Kellys are popular and hard to come by.
With all that in mind, Cucinelli's Q3 revenue was still up 9.2%, 12.4% for the year to date, growing across markets and channels. The company has achieved its current status within one generation and has delivered unusually stable results for over a decade since going public.
Independent, distinct in image but not in design, prestigious, continuously successful. What are the lessons?
Firstly, the value of a well-told story. Have you seen their brand site, Brunello Cucinelli AI?
No? What's AI about it?
They are experimenting with navigation. The AI bit is a red herring, at least for now. But the narrative is unique, deep, beautifully written, and, I don't know, heartfelt?
So, not the usual Dolce Vita pastiche of beautiful people fondling ciabattas across anonymous Italian villages?
Exactly. Instead of clichés devoid of any meaning beyond marketing vibes, Cucinelli's site reads like a Hesse novel and offers an intimate insight into the founder's personality, and by extension, the brand's origin story.
Going against the zeitgeist, leaning into the long text works? I thought we were in the age of TikTok, and consumers lacked the attention span for substantive storytelling.
Perhaps not the consumers Cucinelli wants to attract. And knowing what your particular target audience finds appealing and how best to project it is a takeaway.
Cucinelli certainly has a very distinct corporate image. The man has been writing about the values of humanistic capitalism since the mid-90s.
The clientele he attracts may have choice in terms of product, but not in the intrinsic cachet that comes with supporting Cucinelli.
And in the world where attention is shifting from product to experience, the experience of purchasing product is important.
Couldn't have said it better.
Thank you. So that's the story and the values. What else?
Long-term strategy. Since the company is under family control, even though the founder himself is no longer the chief executive, his successors do not need to play the impress the owner game, where they inflate short-term growth, get a bonus, and move on to run a bigger brand.
Not sure what the teachable moment is. That doesn't sound replicable.
It shows that creating an environment where the leadership can stay present and not incessantly eye the next big thing pays off. To take the time and the mental space to focus on the core customer and not bow to the pressure of following trends and trendsetters.
That long-term thinking also has second-degree consequences, like focus on quality, right?
Exactly. I'd even say broader, focus on offering value for money.
Which is not at all antithetical to luxury. Value for money may well be buying a Rolls-Royce, if the buyer gets great value for the $500,000 they spend.
After years of mostly opportunistic price hikes amidst falling quality,
I mean, a $1,000 basic Dior t-shirt has little to do with the cost of production and marketing. It just tests how much a company can get away with. Short term, it squeezes the most money out of the pool of people who like Dior. But long term, it alienates customers who love and appreciate fashion and increases the share of those who wear recognizably expensive items to demonstrate that they can afford them.
Needless to say, the loyalty of the last cohort is very low, putting luxury houses in a precarious position. The fashion-forward crowd doesn't need the logos and has edgier design alternatives. The fear of recession made many question their consumption anyway.
And drastically overpaying for a mediocre dress, so that some CEO can be celebrated after an earnings call for squeezing customers beyond what was considered possible, really pisses people off.
Exactly. Meanwhile, Cucinelli was praised for inviting Chanel to co-invest in the top cashmere producer to ensure supply and support artisanship, reminding the audience of their commitment to industry-leading quality.
And Loro Piana promoted the use of AI to spot defects in wool bales, a rare mainstream AI story that seems substantive and not concocted by a marketing department.
Companies that leverage AI for marketing really irk you, huh?
Well, getting attention at the back of a gimmick is like running into a room where people play poker, grabbing money off the table and bolting. Sure, it's a short-term gain, but not the strategy I'd get behind.
Yeah, but as you know, various trend reports recommend investing into relationship with the youth. I guess invoking digital tools is an attempt to make brands seem more modern and relevant.
Aside from the fact that a pivot towards youth is disrespectful towards the audience that followed some of those brands for decades, and that we do not know when the kids will have the means and the inclination to systematically purchase €3,000 blazers, confidence is more attractive than desperation. Brands could elevate the kids, teach them why craft is cool, not bring themselves down to the metaverse because people who dress like incels say it is the future.
Let's not get personal. Does it matter whether the tech leaders have taste?
If everyone agrees technology is key to the fashion business future, it is odd to outsource strategic moves to outsiders with no discernible understanding or appreciation of the industry.
On that note, let's take a short break and talk about the future.
Before we broke, we've agreed that 2024 has been a challenging year for luxury fashion, with most brands experiencing substantial decrease in sales.
And those few that performed well had a number of things in common: a strong sense of brand identity, confidence in their strategy, long-term thinking, deep understanding of the core customer, and focus on servicing that particular clientele.
And commitment to quality. So, what do you think they could do to grow further? There are, for example, experiments with using AI for product discovery. Any thoughts on that?
It's early days. AI has unique strengths that theoretically could elevate the experience. It is infinitely better at recognizing patterns and could suggest much more nuanced recommendations. That said, we don't yet know how good AI is going to get and at what step of a customer journey, in what consumer mind state it would be most useful.
Explain what the mind states are, just in case some of the listeners are not familiar.
People come to retail spaces, stores or websites for a variety of reasons that can be grouped into 3 states of mind. At the most abstract, they look for inspiration.
For example, I haven't had a TV since I was 18, and am considering getting one so that the family would spend more time together.
Exactly. And so you wander through a store without a specific plan beyond the idea that you would like to spend more time with your family or friends. You know little of specific products and would appreciate an assistant to explain the lay of the land, say the pros and cons of getting a TV versus a projector, or how a home cinema could change your life. Once you decide you want, say, a TV, you will move to the second mind state, comparison. You will appreciate a much more focused information to narrow down your options, whether you should get a Samsung QN90D or Sony Bravia 7.
But not a Bang & Olufsen.
No, people looking for a new car rarely choose between a Ford and a Ferrari. Those products are made for different functions. If you realize you don't like any of the options at hand, you may choose to go back to inspiration and consider having a different way of watching movies or bringing the family together.
And if I decide to go with Sony,
Then all that's left is location.
that's when you locate the product in a store and pay for it?
Yes. Imagine you are late for an interview and have 10 minutes to purchase a white shirt. Or, in the TV example, you're looking for batteries to make the remote work. In locating mode, you know exactly what you are after and just want to purchase it as quickly and efficiently as possible.
So, applied to AI-powered product recommendations,
AI is superb at analyzing data and finding patterns, but it requires data to analyze. It can recommend interesting, nuanced product combinations if it has something to go on,
so that's if you are a registered, known client.
or if houses find a way to extract a lot of data through a small number of questions, for example through some version of the Proust questionnaire.
So, AI could be an interesting way to introduce a new collection and inspire?
Correct. Again, AI is good at low-risk scenarios that are either completely free-flowing or follow a logical pattern. And a lot depends on the interface.
I was about to say, all of it seems like experiments for online shopping, but not traditional retail.
Generally speaking, people come to stores to talk to other humans, in part because talking is an easier way to quickly exchange a lot of information. In time, however, luxury clients will grow to expect the AI level of data mastery at all touchpoints. So if the trend continues, the stores will need to equip their passionate sales consultants with AI tools that allow machine level of analysis. That's provided AI learns to do all the things we expect it to, reliably and affordably, of course.
So, fashion is not any different from other industries. It's early days, companies are experimenting, trying to figure out how and whether these new tools can be applied.
Yes, with the difference that, on the high end, the houses fight over a limited number of increasingly more fickle customers. It would seem smart to offer some real benefits, and not, as you said, gimmicks that attract clicks, teenagers, and tourists.
Okay, so what would be an example of a real benefit?
AI could, for example, completely revamp product support.
How?
Well, instead of leaving customers to frantically Google how to remove red wine from off-white blazer, a brand bot with extensive product knowledge, trained by top cleaning experts, could assess the tools at the caller's disposal and instantly offer several options for their exact scenario. Unlike people, AI bots can communicate at consistent quality at any hour, accent-free and in the customer's native language. They could instantly supplement instructions with relevant audio or video materials. If necessary, they could involve reliable local specialists, even if the client is abroad and would struggle to explain the matter in the local language.
A good cleaner is incredibly hard to find, and those first minutes after an accident are often crucial. What else?
Social matchmaking. As many as 3/4 of members use private social clubs to connect with their friends and meet like-minded people. The working wealthy are usually of age and position that makes striking new friendships very hard. Finding people with common interests and social status is challenging enough. Approaching them without pretext goes beyond what most would consider doing.
Do you suggest luxury houses use AI to analyze customer data, identify people with common interests, and bring them together?
In a much more nuanced way, but yes. Instead of inviting top-paying customers to generically glamorous events relevant to the brand, Cucinelli could use AI to recognize customers' individual interests and invite them in small groups to the events they'd find personally relevant and exciting.
Do you mean staging a variety of relevant events?
Perhaps in some cases, but generally I meant organizing private experiences within public events. Theatre premieres, exhibitions, concerts, lectures, restaurant openings, etc.
Recognize that 15 of your London clients are into neoclassical music and invite them to a rare public lecture by a famous composer at the Royal College of Music?
Something like that, yes. Make the Cucinelli crowd subtly identifiable to each other and create opportunities for light touch group interactions guided by a gifted host. Like a dinner after the event, discussion in a small circle, that sort of thing.
I'm not big on making new friends, but in the right context and moderated, perhaps.
These new friendships would increase brand loyalty and open doors to more commercially minded engagements.
So, in short, the few winners of 2024 demonstrate coherent brand strategy and a sense of identity that doesn't sway with marketing trends. They lean into exceptional product quality and make the most of emerging technologies without falling into sensationalism. Right?
Right.
The elephant in the room is, of course, that the rate of revenue growth currently expected by the market is extremely difficult to achieve.
That is true.
Price increases worked for a while, but by now, even the wealthy got tired of being milked. So, what could the purveyors of luxury do to match expectations? Revolutionary customer support may not cut it.
They could, of course, continue doing what they've been doing for the past 25 years. Dramatically expand the audience.
But the luxury consumer pool is pretty shallow.
I'm not saying it is a good idea. I'm saying it is a tried path, and one some will surely stay on.
So, are there any good choices?
Creating a new product or service category could open up completely new markets, bringing a ton of revenue.
A new product category? Like motivating men to wear skirts and dresses en masse?
That would be commercially amazing, but a shift like that would take a long time. Before Chanel No. 5, selling perfume was not something fashion companies did. Today, it is where many draw much of their profit. Houses could find another long-term opportunity, not even necessarily something physical.
Interesting. If luxury is a lifestyle, what pain points could companies competently resolve? Is that it?
The houses could, of course, use the lowered expectations of the slowdown to reboot their relationships with both the consumers and the financial market. They could go back to the basics, figure out who they cater to, what value they could produce, and then try to deliver as much of that value to that audience as they can, with as little mindless, unstrategic chaff as humanly possible.
Wouldn't it crater companies' valuation?
Not if the recalibration coincided with the launch of a promising new product or service. If anything, it would put the business on a much more realistic and potentially lucrative footing.
So, to sum up, the luxury industry is in a precarious state. The opportunistic price hikes and falling quality have strained the relationship with consumers, stressed by the expectation of a recession. Your thesis is that luxury brands should get more focused and strategic, prioritize sustainable long-term growth over opportunistic short-term grabs, and compensate the gap in revenue that will appear when they stop chasing customers who weren't truly theirs in the first place by launching wholly new products or services. Did I miss anything?
Practically perfect. This has taken us longer than I expected.
Well, we were following that deck Emile has put together.
That's right, friend of the pod, Emile Cotterman, has recently produced a deck that we pretty much went through here. I'll leave a link in the episode notes if anyone wants to read further.
Before we break, I've got a bone to pick with you.
Shoot.
The deck mentions supply chain transparency as a winning strategy, and yet 2024 was rocked by a number of scandals.
Dior and Armani were prosecuted and convicted in Italian court for allowing sweatshop practices, and Loro Piana was the subject of a Bloomberg investigation that suggested morally dubious practices when sourcing material in Peru.
A scandal that seemed terribly mismanaged. Would you agree?
I would agree that the company has responded with cartoonishly callous arrogance.
Yeah, worthy of a Zoolander villain. Why did they still grow, and why does the deck praise them?
The deck doesn't praise them for moral aptitude or crisis management. It simply remarks that consumers appreciate supply chain transparency, and Loro Piana take productive steps in that direction. They use blockchain to offer customers traceable histories of some of their garments. In the context of sweatshop practices, that technology is meaningless anyway.
So why do you think did Piana, after that Bloomberg piece and, more importantly, their astonishing response, still grow?
There is a glib answer, a darker one, and some light at the end of the tunnel. Where would you like to begin?
Make us a sandwich.
Fine. The glib response is that in the land of pricks, it is better to be a distinct prick than a generic one. It's like what low-information voters say about elections. If all politicians are corrupt, I'll vote for the one that says something I like. The fashion industry is infamous for horrendous supply chain and sustainability practices. This is just expected.
Jesus, and it gets darker?
It does. Dior and Armani caused outrage because it was the consumer who got duped. A luxury house produces bags in sweatshop conditions for €60 and sells them for $2,600. Consumers focus on how much they're asked to pay, not on how a premium bag can be manufactured for so little. Aspiring luxury buyers are incensed. They thought they could recognize quality, but have been taken for fools. It is embarrassing. In the case of Loro Piana, it was the Peruvian villagers who got screwed over, and we don't have much energy or time to worry about their lives.
And what is the light?
We should stop pretending customers will make the large businesses choose decency over profit. Their goal, the purpose of their existence, is to maximize profit. Why would we expect anything else? The only segment where decent behavior may be of tangible benefit is the very high end, where consumers are flexible on price, have plenty of choice, and may choose to not reward immoral assholes with their money. But again, it should not be up to consumers to make businesses be good. We do not hope the food we eat doesn't poison us. We have laws that put producers behind bars if it does. The new EU due diligence directive makes large companies, both European and foreign, responsible for their supply chains with penalties reaching 5% of the net worldwide turnover.
Is it in force yet?
No, but it is expected to become law in 2026, begin to apply mid-2027, and come into full force by mid-2029.
So there is hope.
There is hope.
Well, great. I need a shower and a drink.
Ta-ra.